Hey guys, Mike Sheamer here, and I'm gonna hopefully have this work out finally. I have a new car, or new to me, so I don't have a really good setup for where to put my phone as a camera for these videos. I used to have a good setup in my old budget Benz. Anyways, today, I'm heading off to the gym. Do a gym workout as well as a long walk for some low impact cardio, and that's one of the advantages of working from home, having passive income, having an online business, and also having plenty of dividends and distributions coming from my investment accounts. So today I just wanted to talk briefly about why I have so many different stock holdings instead of just ETFs, which, honestly, there are a lot of negatives of having a lot of different stock holdings. I definitely sometimes think I'm making things a little bit more complicated than they need to be. Just because of the headache and all the research and the time associated with building a portfolio from scratch is what I've done over the last 5 years. And I do, for my retirement account, I have all U.S. dividend stocks. So there's no fees. There's not even any ETFs. There's just straight dividends from U.S. companies, and that keeps it pretty simple. But I still have a couple hundred different holdings in that one. But my main portfolio that's not in my IRA, again, has over 600 stocks and ADRs alone. So I do have international holdings. I have holdings on every single continent that has businesses. Here, let me close this up. Sorry, probably terrible sound. So I have holdings, obviously the US, Canada, a couple in Mexico, a lot in Asia, a lot in Japan, a lot of China, a little bit in Singapore and Taiwan. A few companies in Australia, tons of European stocks, as you can imagine, and a few stocks in South America, a few stocks in Africa as well to round it out. So we'll go with advantage one is diversification. So you are very diversified. You're not just in the US market. You're not just in the North American market. Just checking to see if this is still recording. So if something happens that's more isolated to the US or US and Canada, then I'm not going to be obliterated by something that happens. And that could certainly be the case with the election coming up. There could certainly be some major issues in the next 6 to 8 months. The craziness before the election, during the election, the aftermath, which takes up, a couple months to get it resolved and get the transition going. Whatever happens, it's going to be a big change. So diversification is big. Second advantage of having a lot of different stocks is you're going to be getting dividends all the time. I get dividends every single day the market is open. I get dividends that are showing up even on days when the market is closed. I see them showing up on weekends. I don't know if that was from the previous Friday, or if it's kind of just in queue for Monday, but you get my point. You get dividends all the time. Sometimes they're very small. Sometimes there's not a lot you can do with them immediately, but they add up and they compound, and it is huge. And And the second one is the third advantage I'll say is that you can buy the best companies in the world in every single industry that you want. And that means for different types of holdings, could be REITs, REITs, the real estate investment trusts, could be BDCs, business development companies, that invest in, they do private equity or whatever it is, different utilities, which are very good to have kind of in a shaky market, things that people need all the time, consumer goods, tech, like you can literally go for every single industry, every single sector in every single country. You can get the best in the world. If you're in the United States and you want to get the biggest chemical company in the world, then you have to go to Germany. You got to get BASF, I believe it is. If you want to get some of the best car companies in the world, then you can go to Japan. You can go to Europe. There's really no restrictions, no limitations. Yes, the U.S. market and the S&P 500 are fantastic for the most part, and it's hard to go wrong. It's hard to beat the S&P 500. I've done it. I'm hoping to beat it for the third year out of the last 4 years. Hoping to do that. But it doesn't have everything though, okay? And it might not have everything forever. So just because the US dominates the market right now, and it has for so long, doesn't mean that's always going to be the case. The S&P 500 might not always be the gold standard in the world. And anyway, so you have every single type of holding, you have every single industry, any country, the sky's the limit. So that's all I'm going to say for 3 advantages of having a large, diverse portfolio of individual stocks. I will say one last thing is that you will learn a great deal. You will learn a lot more from getting individual stocks than you will from buying ETFs. Even if you're buying dozens of ETFs, you will learn so much about the stock market. You'll learn so much about indexes and industries and different countries and politics. You'll learn all these different things because it's all interconnected. Because every single individual stock you have to vet somehow. You have to research it. You have to kind of take a look at the broader economy and see if it makes sense. So I've learned a great deal in the last 5 years. I've invested before that, of course. I worked at a financial services company too for a while. I've worked at so many different companies. I've had many businesses. I've had successes. I've had failures. But I've learned an incredible amount from investing in individual companies, more so than ETFs, more so than closed-end funds, more so than mutual funds. So just consider it. I know ETFs are convenient. They do have fees. They do have expense ratios. Hopefully most of them you have are well under the 1%. Hopefully they're closer to 0.06 or something like that, like SCHD, or 0.03 like VU. But guess what? Dividend stocks have 0 fees. ADRs have a very small fee. So as long as you're going with decent dividend stocks and kind of foreign blue chip kind of companies, then your dividend's going to be a lot higher than the ADR fees or the foreign tax fees, and you can probably write those off. You can speak to a tax professional about that. Anyways, I hope this helped just a little bit, give you some ideas, why it can be sometimes worth the headache and the time and the research to go for individual stocks, even if that's not a strategy that you want to stick with in the long term. Just something to think about. So thanks for watching, guys, and more videos coming soon.